Thank you everybody for joining. Good morning or good evening, whichever part of the world you're in. My name is Michael Weston. No, I'm just kidding. You know that's not true. My name is Roop Singh and I'm the founding co-chair of TAG's Blockchain Society. And I'm here to give you an update and tell you how this session will work today. So here's how the flow will be. I'll give you a brief society update, and then we'll hear briefly from our sponsor, TIBCO. And then I'll set the stage for today's panel discussion and introduce the moderator for today. And then he will lead you into the engaging panel discussion debate. So on that note, let's see what we have been doing so far. So 2020 was the year of foundation for us as the TAG Blockchain Society, the newest society for TAG. And 2021 will be the year of expansion. TIBCO recently joined us as an annual Gigabyte sponsor, so thank you to them. And when you are ready to showcase and sponsor, you may contact Haley Middlebrooks, our chair for sponsorship. Haley, I see you're here, so if you could just raise your hand in the chat and share your email or LinkedIn so folks know how to reach you, that would be awesome. Now, talking about events, we did 3 very engaging events this year since our formation in June. And all our events, including this one, is led by the wonderful Jagruti Solanki, who, by the way, just joined BitPay as their CEO. So congratulations to you, Jagruti, and to BitPay.
Thank you, Roop. And it's CFO, by the way.
I did say CFO.
Oh, okay, just making sure.
You know? So Jagruti, if you could also put your email or LinkedIn in the chat so people know how to reach you about some ideas on events or when they want to join these events.
Sure.
Awesome, thank you. Moving on, we expanded the board recently, and that's an exercise we'll be going through in 2021 as well. We added Mark Holt, the CIO at Incom, Nelson Petrick, the CTO at TIBCO, and Mahesh Sahasraman, Principal Architect and Blockchain Lead at UPS on our board. So welcome to all of them. And we are also exploring partnership with the Wallstreet Blockchain Alliance, and Ron is here with us. He will be part of the speaking panel later, so you'll hear from Ron, who's the CEO and chairman of the Wallstreet Blockchain Alliance. We're very excited about that partnership coming up in the next year. So moving on, just to point you in the direction, TAG Blockchain Society has a website. You can go to it, and there's an interest form here on the webpage where you can sign up for interest in TAG Blockchain Society's events. Or you can also reach out to me directly if you have any ideas on who should participate on the board, or if you want to join the team. I'll share my details soon on the chat. So on that note, let's welcome Miguel Torres, Principal Architect at TIBCO, and listen to TIBCO's products in blockchain space and their vision. Miguel, over to you.
Thank you, Roop. Okay, let me try to share my screen. Can you all see my screen right now?
It's coming up.
There we go.
Is it good? Awesome. All right, thank you, everybody. Thanks for giving us the chance to speak here. I'm just going to quickly give an overview of our organization within TIBCO, what we are up to, and in terms of blockchain and a little bit of everything that we do around here. Basically, the main focus on, well, just a little overview on Miguel Torres. I've been in TIBCO for 14 years now. I'm a principal architect, and I've been part of like different products and projects. I've been from the cloud. When we pivoted to the cloud like 6 years ago, I was part of the platform there. And now I'm working on IoT and blockchain specifically. I work under Nelson Petracek, the CTO of TIBCO, and we have the office of the CTO, and in particular, a little organization that it's called TIBCO Labs. In TIBCO Labs, what we have is a set of different projects, or it's sort of like an incubator where we actually work with different cutting-edge technologies and bring projects out in the market. Usually they have the shape of open source, and once they get some traction and some acceptance, we actually promote them into products, and we like to work with partners and with everybody that forms a good community. So just like a quick overview of some of the projects that we have. We have from Cloud Starters, which is just a suite for creating web applications that run on the TIBCO cloud. Then we have Project Discover, which is basically for process mining. Then we have Cloud Conversations, which is basically a way for you to have a conversation with your enterprise data. So sort of like natural language processing. Dovetail, which is the one that we're going to go a little bit deeper today, because it's our blockchain capabilities, which is basically for smart contracts, no code, low code, sort of like way for you to develop your smart contracts. We have AutoML for data science to have your auto workflows to generate your applications. Project Air, which is our IoT project, gaining a lot of traction, that allows you to just register your devices and do some ML at the edge, some machine learning at the edge. Project Journey, which is a way to engage with your customers, to have some more insight, have also some machine learning on all the data that you're sharing with your customers, et cetera. And then we have Project Art, which is our augmented reality project. And then last but not least, some graph builder, which is basically a way for you to define your graph entities that can be the metadata for your graph database, basically. So that's kind of like a quick overview of all the projects that we have. But let's dive a little bit deeper into Dovetail, which is what it's more interesting for this talk, right? Like we're in blockchain specific world right now. So basically Dovetail is a way for you to define smart contracts, right? So just quick overview of like why smart contracts are important and what we think is the angular piece of our project, right? Basically, smart contracts allows you to embed trust and transparency to business processes that are at the core of a blockchain, right? So basically it just eliminates the need for a third-party trusted entity, and it just shares the actual load among different entities that join the blockchain network, right? So that is one of the key factors of smart contracts and blockchain in general. It allows you to execute precise transactions instantly. Since all of that is automated, then it will be executed and nobody can stop it, or at least it's harder to stop because it's shared. The load is shared because for all the nodes in the network. You have therefore more secure and reliable data because it's not one third party that you're trusting in. You have more eyes on the transaction basically. And by doing that, you can minimize the transaction cost. So that's like a quick overview, right? So what are we trying to do with Project Dovetail? We started like 2 or 3 years ago to look into our blockchain strategy, and we figured out that, okay, writing smart contracts is not easy. So what we're doing is trying to enhance the security by having a way for you to model your smart contracts. On the left, you have a picture of how a smart contract will look like, and there is no code there, right? So what you would be doing is to add different blocks and have different paths that create your smart contract business logic. Basically, the transaction goes like this, and you keep adding activities, and then you can have different branches with conditions. So you are basically dragging and dropping different activities depending on what you want to be doing. What we think that is simplifying the development because you reduce the amount of problems that you can include with the code, right? You are separating your model from your business logic, basically, and your underlying technology as well. And also, basically, once we have this, since we are using the same tool that we use for our TIBCO integration, you can create your client applications and different integration paths with the same tooling. So the same looks that this smart contract will look like, you have a REST API with some business logic as well. So it's very easy to integrate your current technologies with blockchain, which at the end is what you want, right? You don't really want to care that a blockchain is running. What you care is that you're having more security, or you have these properties, and then you're using the same tools and the same concepts to do that. So some of the key capabilities that you have there are, as we saw, some visual representation. So actually you lowered the bar who can actually write smart contracts and who can integrate with your current systems. Then the second thing is you are decoupling your business logic from your underlying technology, meaning that, yeah, you have a drag and drop and you can switch to different underlying technology without changing the actual model. You have a better input and output. So you have mappings instead of actually writing code to actually get the inputs and generating outputs. And the last but not least is interoperability, which we are seeing that it's a very interesting feature where you have your own systems. Let's say you have an SAP, or you have any other Oracle database, or you have any other business process running, BPM, for instance, and you want to call a blockchain technology, right? Or you want from the blockchain technology call other systems. With these two, you can actually do that interoperability very easily with zero code as well. And just to finish, just a little bit of an actual dovetail architecture diagram that shows you a few of the parts. So on the top left would be the client application. That client application, you do it the same way. It's a drag and drop client application that allows you to expose your smart contract as a normal API. So you do REST, GraphQL, and QTT, anything that you want. And you can actually add some logic to it. It's not just a static API, but you can actually have a smart API that does something for the transaction. So that's the first component. Then the second component is what we've seen, which is you write your smart contract using drag and drop, or you model it, so to speak. And then the last one, we have some toolings that allows you to deploy that smart contract into your blockchain runtime of choice. Right now, we support Hyperledger Fabric and R3 Corda, but we're expanding to more.
Thank you, Miguel.
Yep, no problem. So that's what we have today. Thank you so much for the chance to speak here, and thank you meeting you all.
Thanks. We applaud your efforts and TIBCO's efforts to expand the blockchain space and introduce new products in here. So we look forward to a lot more innovation from you guys.
Thank you. Appreciate it.
So coming back to the topic, so let's review very few key highlights from this year. In February, Atlanta-based ICE acquired Bridge2 Solutions, wherein Bakkt would develop a consumer application to provide digital asset aggregation and conversion through a single platform. June of this year, NASDAQ released its marketplace services platform for giving clients an ability to manage the full life cycle of digital assets. In July, the U.S. Office of Controller of Currency, OCC, announced that all federally chartered banks can now provide custody service for crypto assets. That was big news. In September, Federal Reserve Bank of Cleveland announced that it is working with several reserve banks to test a range of distributed ledger platforms. In October, which was another big news, a bill, Blockchain Records and Transactions Act of 2020, was introduced in the House. Also in October, the Digital Dollar Project published proposals for 9 key pilot programs to identify practical opportunities to test United States central bank digital currencies. In October as well, the World Economic Forum published blockchain standards mapping initiative to reconcile technical standards from a number of different entities and industry groups. PayPal embraced cryptocurrencies and entered in the space with a New York license. And also in October, several central banks published a report outlining key principles for central bank digital currencies. So as you can see, this year has been a hectic set of activities, and I'm sure this is just the tip of the iceberg. this year has been very impactful and radical in a lot of different ways because of the pandemic. So there's a lot to unlock and unpack here. So to do that, as we review the wins and fails of the blockchain and digital assets ecosystem in 2020, let me introduce you to Dr. Benn Konsyski, George Kraft Distinguished Professor at Goizueta Business School at Emory University, previously at Harvard. And he will introduce the speakers and lead you through the panel. Over to you, Dr. Benn. You're on mute, Dr. Benn.
Yeah, sorry about that. I had a parallel meeting set, and some people popped in just as you were introducing me, so I apologize. Thank you very much, Roop, and I applaud your leadership on this initiative, and in the whole area, regional and in the blockchain domain specifically. And I might note we have a couple of my students in here as well, and they have said that you are one of two top presenters that they've encountered during the year. So we appreciate your exposure to the student population also coming in here. Miguel, I applaud. I love the Dovetail initiative and want to hear more about that. I'd been a fan of TIBCO from the beginning. Vivek Ranadivi was a colleague I've known for many, many years, since the New York days of TIBCO. And so I've been a fan all along, and happy to see the new activities ongoing in here as well. I want to make sure that we folks put questions into the chat, that as questions come up, please feel free to feel free to put questions into the chat, and we'll have those questions raised during our discussion. I wanted also to note that I've been interested in the domain for quite some time, even though we've only, 12 plus years in many aspects of this domain. One of my students is Barry Silbert, who has been active all along from the beginning in digital currency domain, and also in blockchain technology application and global application of the technology in innovative domains. But today we have an extraordinary and exceptional panel for us to deal with these aspects during our time. And it's a brilliant mix that covers the entire entire spectrum of areas related to blockchain, crypto initiatives, and digital asset management, and I think we'll have an interesting discussion. We want to look at, first of all, that we've had an extraordinary year. It's almost trite to say so, but many of those aspects, including the COVID activity, as well as the bizarre election patterns, all have informed or had fostered discussions associated with blockchain records for contact tracking or voter recording as well. So it's stimulated in some sense and energy looking at application and resolution of immediate problems, as well as we look at the transformation of commerce and legal practice and other and financial practices as well. So we have a good opportunity to discuss a broad spectrum of things, and as I mentioned, we have just an awesome awesome panel to hear from today. We have Kel Canty with us, who's the CEO of Verady, and we're going to hear from Kel, not only about the financial side of it, the accounting records and tax issues, but also on as we move into digital asset structures in there. We have a unique opportunity. We have our own Austin Mills here, who, for anybody in the Atlanta area thinking, or Georgia and Southeast thinking about blockchain on the legal side, thinks of Austin Mills and Morris Manning and Martin. So as much as possible, we're going to hear from Austin, probably less about future predictions because he is, after all, a lawyer, and but more so about some of the activities, guardrails, and regulatory issues that are present or emergent that we need to pay attention to. And we have another special guest as well, Juan Quaranta from Wallstreet Blockchain Alliance, and we'll ask Ron to tell us a little bit more about WSBA and their initiatives. And Ron has an extraordinary background in looking at different dimensions of industry applications, both on the crypto currency side of the house, but also on digital asset management and immutable record applications in industry domains. So we have an extraordinary panel to offer comments. I'd like to start by offering each an opportunity to tell us in a few minutes about their any more relevant to fill on their background, but also what highlight 2 or 3 things that were rather special about this year. Roop mentioned a number of items, both he talked mainly from the US side. Some might have global notations as well to bring forward. But what were remarkable activities are events that were critical in this pivotal year that probably otherwise would have been headline news for many of them, but others dampened by our necessary focus on some of the other activities. So I'm going to start with Kel and ask him to offer a few comments about highlights of things that they have noted.
Okay. Thank you very much, and great to be here today. I'll give you a quick introduction, then I've actually got 3 quick slides to show. We'll just run through them, kind of the highlights, similar to what Roop had gone through.
You might describe Verady as well.
Sure. So again, my name's Kel Canty. My background is actually in computer science and fintech. Computer science degree from Georgia Tech. Got thrown right into the world of global payments with wire transfers, tier 1 banks, cash management applications going all around the world. First Gaijin and Mitsubishi Bank's data center in Tokyo, implementing things for Barclays, ABN AMRO in Brussels and Amsterdam and all kinds of places like that. And then kind of went into the serial entrepreneurial world where we built reporting and decisioning platforms that were sold by Equifax and TransUnion. And eventually exited that company by selling it to Fair Isaac, if you know of your FICO score for credit and risk decisioning. Then I was fortunate enough to meet a couple of other Georgia Tech grads that were very early into Bitcoin, BitPay, if you know the founders there, Stephen and Tony, and ended up founding one of the world's first regulatory technology companies for the Bitcoin space called Compliance. There we helped with the Bitcoin Foundation and talked to about 3 sitting senators around regulations and legislative work around Bitcoin, which was the only crypto at the time. And we ended up going through a FinCEN, Department of Treasury audit of practices as we helped clients such as BitPay with KYC and AML, and also helped produce the world's first financial statement audit with a local accounting firm named Apria, which is a top 50 leading crypto firm. From there on, we've built on that, and we've rolled out Verady and our Electable platform. That's where if you talk about joining the worlds of decentralized finance and blockchain assets, such as Bitcoin, such as tokenized securities and things like that, you run into kind of a paradigm clash with traditional financial guardians, such as any advisors, any accountants, any regulatory agencies that want a centralized institution. Say, you want to know who owns this Apple stock and what the price of the Apple stock is. Well, you go to the stock exchange. You need to know who owns this bank account. You need to know how many transactions are in it and what the balances are. Well, you go to Bank of America or Truist or whoever owns that bank account, whoever the centralized institution is for that particular asset or account the asset is in, and that doesn't exist for blockchain. So we have built Verady to provide systems to bridge the gap between traditional financial reporting and tax and accounting to the decentralized world of blockchain assets, and act as that bridge, and in some ways act as the proxy or the substitute bank reporting institution. We've been called bank statements for blockchain. And we include some great clients such as blockchain.com and also several top accounting firms. So that's kind of the overview of my background in payments and fintech and risk, and then our latest work in Verady for doing blockchain asset accounting and tax. If you'd like, I can go through a quick couple of slides to kind of set the tone around 2020, or we can do the other intros.
No, please go ahead.
Okay, great. I'm going to share that and see how this goes. I'm on my 4th messaging system today, so hopefully it goes well. If everyone can see that.
Yes, we've got it.
Okay, great. And hopefully I can also, I don't seem to be able to, may have to minimize that. Okay, so if you can see this. So as mentioned, in the past 3 months or so, the OCC and the part of the US government cleared federal banks to hold and also facilitate trading for crypto. Huge move that was brought about from the new director of the OCC, former in-house counsel for Coinbase, which was helpful, right? First ever crypto bank was licensed at the state level in Wyoming, and now there's actually a second one, and my understanding is that there's a line out the door. So there are 2 official United States crypto banks in existence as of a couple of months ago, and there will be more coming, which is great. JP Morgan just 3 weeks ago created a unit dedicated to crypto assets and blockchain. Fidelity earlier this year came out and reported that 33% of large institutions own crypto assets. It's probably up to 50 by now, 50% or more. And you have public companies buying Bitcoin for their treasury. So Square being one of them. Their Cash App, I think they reported last quarter that they have $1.6 billion in revenue from that. They purchased 50 million just to hold as part of their treasury strategy. MicroStrategy, another publicly traded company, I believe, has purchased about $500 million worth of crypto. Again, the Square, as mentioned by Roop, PayPal's entered Bitcoin. They actually had to stop and restart their entry because the demand exceeded their greatest expectations by a far cry. So they tripled the amount that people were able to get. They expanded greatly and had to re-enter based on the huge demand that showed. Another data point for you is that Coinbase, one of the larger exchanges in the world that people have mostly heard of, they did a first half. Again, this is just the first half of 2020, and revealed they had over 35 million accounts in existence in the United States. So if that's not adoption, I'm not sure what is. And actually, last week, Visa came out and made a public announcement that they're partnering with a stablecoin cryptocurrency creator called USDC. That's a coalition between a couple of different ones where you have a stablecoin, and that's a crypto coin that represents a dollar, and that helps facilitate payment and takes away the volatility. So that's going to lead to a lot of great things in the ecosystem. Another couple of points on this final slide. I don't want to turn this into a presentation, just make a couple of great points real quick. crypto finance, which is kind of peer-to-peer lending, and the ability to lend crypto assets between people using a smart contract, as was mentioned earlier, has grown from practically nothing to $20 billion in activity this year. Also, the U.S. Federal Reserve out of the Boston branch is working closely with MIT to evaluate, and the term there, CBDC, stands for Central Bank Digital Currency. Again, that's a form of crypto or digital dollar that the actual Federal Reserve or a central bank can issue. And along those lines, people should know this, is that there's already two in existence in the world, and China is actually trialing theirs right now. They're actually in pretty late stages of that trial and have conducted about $500 million of activity in it and are looking to do a full launch of their central bank digital currency in spring. So things are moving along quite rapidly, and it's making for some incredible, impactful years. You'll notice I didn't mention the price. I'm not a big price guy. I think price follows adoption and recognition of store of value, and you're seeing that naturally. I think these are the big events that are causing that. I think the price is the tail, and adoption and regulatory clarity like we're seeing right now is really the dog, if that kind of makes sense to everyone. So thanks for letting me share that with you guys. And just kind of wanted to kick that off with some really things, because in the past I've been in crypto. I didn't mention that, but since about 2012, and 2020 has been one of the most meaningful years of actual movement forward, where people talk about, oh, well, that's the government's going to shut that down, or everything's just a pilot, or things of that nature. And just wanted to share those points with you.
Yeah, thank you very much, Kel. Certainly the game has changed. The vocabulary has changed. The attitude has changed on both from the corporate side, the financial community, the global structures, the sovereign entities as well. So a lot is in significant change just in the last year, and probably would be even more noteworthy, or at least vocal, had other things not dominated as well. But it's a shame that you won't talk about price and price as well. So let's get somebody else. Let's hear from somebody else who won't talk about price at all. Austin, from the legal standpoint and your lens, your unique lens in here, what strikes you as noteworthy in the last year? We're going to talk about the future on in a latter part, but I'd like to get an understanding of what strikes you within the last year. Austin.
Yeah, thanks. Absolutely, Ben. And I'll go ahead and, just because say Bitcoin's price too low, right? And so sort of rules out the gate and leave it at that. From a legal sort of quick introduction, I'm a partner at Morris, Manning & Martin. I sort of lead our blockchain and cryptocurrency practice, do a lot of work in the fintech payments and technology spaces in general as well. And help clients a lot with navigating the regulatory side, as well as sort of the commercial, contractual and similar issues that arise relating to cryptocurrency and blockchain. I mean, I'd say from a 2020 from a regulatory perspective, I think inevitably the focus has been more on the cryptocurrency side than any sort of enterprise blockchain. And I think by their nature, that's inevitable, right? I mean, that what's happening at enterprise blockchain level is not something that necessarily warrants regulatory attention in a significant way, as opposed to cryptocurrency, which is a bit more novel and perhaps complicated from a regulator perspective. So we've seen a lot of movement in that regard. I mean, at a state level, I'd say most states are still kind of incremental movements, right? You'll see a handful of states come out and just clarify that you can keep records on a blockchain, or you can record securities on a blockchain. And whether or not we need those regulations, who knows? But I think it's good that states are thinking about it and looking at that. As Kel mentioned, though, we have a few states that are much more active, and Wyoming is by far the best example there. Kel mentioned the bank charter. I think Kraken was the first one, and as he said, that there's now a race for all of that. I mean, while in Wyoming, and this happened pre-2020, I think, but they they effectively exempted utility tokens from their securities rules, which is kind of a direct contradiction to the way the SEC has generally been coming out on that front. They exempted virtual currency from their money transmitter statute. They exempted virtual currency from their state property taxes. They created a fintech sandbox for people to try things that might otherwise still be sort of regulated areas that and there are probably 24 other regulations kind of just meant to grease the wheels. I mean, I think from a Wyoming perspective, they're very much just going after this market, right? They've for years have now shown their commitment to being a good trying to attract particularly cryptocurrency based projects and companies and solutions and all that. And I think they're having real traction, and personally, I think it'll be a little bit interesting if we see a conflict between Wyoming and the federal government where there's overlap, and how that might play out, if at all. But a lot going on there. We saw Arizona also, stood up a fintech sandbox that can be used to try some different things in crypto that might otherwise be sort of regulatorily complicated. From a federal perspective, I think we've gotten some incremental clarity in the past year around securities and taxes. The Telegram litigation and dispute with the SEC has been ongoing, but I don't know that we've seen big shifts from prior years. As Kel noted, banks can custody crypto now. Talk about central bank digital dollars. Also, it hasn't gotten a lot of attention, at least from my vantage point recently, but the Attorney General's cyber digital task force released a sort of a cryptocurrency enforcement policy that I think in October, which is kind of a guide of how how they might be thinking about the enforcement of cryptocurrency under existing laws and within the existing framework.
Austin,
Ben.
This all seems to parallel. It sounds very reminiscent of the deployment of e-signature initiatives 15, 20 years ago, that growing in these isolated state agreements and on a collision course with the federal activities to be subsumed by that, aligned with or against different regulatory structures. There seems to be it echoes the pattern of that growth. Does that sound familiar to you?
Well, admittedly, I wasn't paying much attention in the e-sign example.
You were a mere child then.
Yeah, but no, that does sound right. I mean, I think I would add to that as well, that I think that there, especially at the federal level, which is where this would make sense, there's the progression of the focus seems to be, at least from my vantage point, first and foremost around particularly Bitcoin as money or cryptocurrency as money and the implications that has, from a monetary policy perspective, from a money transmission, from a anti-money laundering perspective. It felt like back in the 2 or 3 years ago that the most attention at the federal regulation level was at the the ICO, SEC, securities regulation. Mm-hmm. And everyone seemed to be primarily thinking about this stuff and that. Bitcoin obviously was there and all that, and a lot of the regulators kind of passed on weighing in or doing much interesting. Now I think there's less, the ICO thing, I don't want to be careful with my words, is a little bit played itself out, and all that. I think now, with some of the maturation, we're seeing more of a focus on what does, I think it's Bitcoin more than anything else, but what does Bitcoin mean to the US dollar, to fiat currencies around the world? What does it mean to our institute, our financial systems? What does it mean for banks when publicly traded NASDAQ companies are issuing convertible debt to turn it immediately into a Bitcoin, right? And then, and does and I think we're going to get to some of the predictions. So I won't sort of step on that, but I think that I kind of just see that being the primary driver of what we're likely to see from a regulatory perspective coming out at a federal level for at least the next year. I think that seems to be where the primary attention is.
One fellow who is an acquaintance of mine, Sabnindo Mohante in Singapore, has a unique aspect in Sandbox in the Monetary Authority of Singapore that allows them in some sense to tax or challenge the laws or even break the laws of the land in experimental protective sandboxes to look at things. And it seems like the Fed has been actually more open than I thought. In the beginning, everyone would say, there was the answer was no. What's your question? And now we're seeing more intriguing notions in there. But I also wanted to ask you, before we move on to Ron, to look at, to comment from the standpoint of blockchain and privacy issues. And you look at contact records and blockchain, or you look at, on the voting side, voting immutable records on voting activities. We're starting to cross into boundaries that that raise some of those challenges as well. Any comment?
Yeah, absolutely. I mean, I'll defer on the voting piece to other people. I feel underqualified on that. I've read a lot of criticisms about the idea that blockchain as a technology ultimately makes sense for voting. I think on its face that makes a lot of sense. I think when you dig deeper, it's a little more complicated. But again, I feel underqualified to fully weigh on that. I mean, on the sorry, what was that was the kind of the second piece. What was the first part you mentioned?
The contact tracing.
Right. Yeah, and then just the privacy and the data and all of that. Yeah, I mean that's been a really interesting topic here, I think, for several years. And again, just my vantage point seems to be getting less attention in 2020 than it might have in 2018. You know, I think the big, one example, is GDPR that comes to mind. That, the way it's written presents a real challenge to the way blockchains work. And, we saw back when that was coming to a head, we saw people pulling out of the market because they just couldn't make it work and all of that. And so yeah, privacy, I think it's been fascinating since blockchains really emerged on the scene, but the privacy blockchains by their nature can be fantastic tools for maintaining privacy, but our privacy laws were drafted assuming an intermediary, and therefore when you try to make sense of those laws as they might apply to a decentralized blockchain, it always seems messy, and I don't know that the regulators have done much work in trying to solve for that. I mean, ultimately, it's a little bit on them to try to solve for it.
That's a critical issue, that notion of intermediation, especially where the sovereign structure is the intermediary, or agents of the sovereign state are the intermediaries, where they're perceived that's a trusted element. And the whole reason a lot of this grew in the late 2000s was to circumvent sovereign control in many respects. So it's interesting to see how that will play out. Thank you very much, and we'll come back to you as well. Ron Quaranta has an extraordinary broad background and is the chairman and CEO of Wallstreet Blockchain Alliance, and WSBA is certainly a key pivotal influence in looking at both industrial and financial community adoption practices, governance, and sharing, participation, and cooperation in areas related to digital asset control and crypto currency management as well. And Ron, what strikes you in the last year?
Well, thank you, Dr. Ben. Thank you, Roop, for being here. It's always great to be with an audience like this. Great to be here with Austin. Always great to panel with Kel as well. I've had that privilege many times in the past. One of the things that really strikes me, and I'm happy to give you a little bit of background about the WSBA as well for a moment, but is the tone and tempo of the conversations. And I think both Kel and Austin have alluded to this. There was a point in 2013 or 2014, if Kel and I were at a large money center bank or at any government regulator and brought up Bitcoin, blockchain, crypto assets, and payment rails, odds are we would have gotten thrown out of the room, all things considered. Today, it's an integral part of the strategic conversations that they all have. And my background really is many years in financial services and financial technology. So I've had the opportunity in my career to see that evolution. I've been in financial markets long enough to remember still reconciling the little trading tickets from exchange floors that would be brought up in big boxes. So in many ways, I joke that I've been waiting for blockchain for 35 years. So the other thing I would add to this conversation that I think is critical and Kel and Austin and you, Dr. Benn, have seen this evolution of these marketplaces and seen the evolution of banking and seen the evolution because of blockchain technology and crypto assets of how we value money, how we interact and exchange money, how we exchange assets and value. I think critical to the conversation as well, and I'm happy to get into a bit more detail, is it's not just a financial markets conversation when we look at digital assets, when we look at blockchain, when we look at crypto. When you look at things like healthcare, and you alluded to this earlier, when you look at things like real estate, a multi-trillion-dollar market, when you look at things like identity, you referenced voting a bit earlier. When we talk about voting and healthcare records, where really the underlying piece of all of that is an identity conversation. How is identity controlled and managed? And that's going to be an evolutionary discussion for us for decades to come. How we do what we do is changing because of crypto assets and because of blockchain. And Dr. Benn, the last thing I will leave off with you is I will not make any price predictions. My board of directors will not allow me, and I do want to keep my job.
I somehow got the message that all three of you are going to avoid any declaration of price association. It seems that one common theme is the notion of patterns of intermediation that are the basis of trust has been historically intermediaries that were trusted intermediaries. And a part of the challenge here is to say that some of that intermediation is not needed, or at least as expressed in the past. And that a part of our promise going forward is that a new alignment of roles and responsibilities is possible. For you who had worked on the exchange and with paper, why do you need to be there? Why do I need an exchange? Kel mentioned going to the stock market, stock exchange for information on it. Why is that needed anymore going forward? So to me, it starts to raise questions that are existential on related to patterns of intermediary control and basis of trust. Any comments on that going forward from any of the panelists?
Well, I'd kick off and weigh in with, it's always instructive to think back to root causes and reasons that we had these intermediaries. And when you look over the history of commerce, we realize things like stock exchanges and banking intermediaries were developed for a reason, right? It's everything from price discovery to standing in between parties from a credit risk perspective or a counterparty risk perspective. And what I would argue is that innovations like blockchain technology and others, we'll see more from AI and quantum in the future, for example, begin to reduce the need for those level of intermediaries. So it forces us to ask, what was the reason for them? How do those reasons evolve over time given technological innovation like blockchain?
I would note one other thing, well, a couple of other things probably because I won't shut up. But, you can say definitively that from a standpoint of efficiency and scalability, centralized solutions are always going to be better, quote unquote. They'll have more throughput, they'll be faster, everything of that nature. So there are trade-offs, and not every solution is suitable for a distributed blockchain implementation and service, right? So people need to, that was one of the problems with the initial hype around blockchain, is that everyone tried to put a blockchain solution around a problem that wasn't a blockchain suitable problem. And then you hit wait a minute, this isn't working, this isn't what. Well, you applied a solution that was not appropriate to a problem, and then you expected it to be a magic fix. And I'm glad we're getting beyond that cycle where we say, is this a problem space, and are the constraints such that blockchain is a good example of that? The other thing, as you mentioned, around centralized trust and transparency that I think has accelerated, particularly when you think about identity, is if in the past, we have not had the ability to harvest information centrally. If you think about Facebook, if you think about LinkedIn, if you think about all these marketing and behavioral activities, wherein someone contributes to an ecosystem that is centralized, like Facebook, and I'm going to keep using that example because we're all familiar with it, and it's probably one of the most egregious, beneficiaries of this activity, and they harness that activity and then they sell your information. So this is, again, new to the digital age, but in addition to that kind of disintermediation and taking the trust in the centralized entity away, it's either complemented or it's compounded, I'm not sure which, maybe both, by the factor that information and data, I'm not going to say the new oil because that's so, trite and played out, but information and data is important and behavioral data is important, and people are starting to understand and think about privacy and data rights in the terms of they need to own it. So not necessarily decentralization of a centralized entity just per se to have multiple other organizations, equally share. So that is a valid thing in things like pharmaceutical tracking, food tracking, other great uses of blockchain. But for an individual to maintain their privacy and their data and their behavioral, personas, and be able to allow access on an as-needed basis or an as-wanted. Maybe I don't care about my privacy. Maybe I want to sell my privacy to the highest bidder. I want to be the beneficiary of it, not Facebook, right? And that is a key thing that's unique to the age and information which we're in that blockchain can enable. And that's sometimes lumped in with the trust and the central authority, but I think it's a separate and distinct use case that deserves some thought.
I think that's a very critical issue. And as a member of, I'm with Vint Cerf and others in people-centered internet activity that has that as a key part of the central theme. One of the aspects related to your comment that I want to open up to the panel is the complexity is not a problem anymore. So many things were done seeking efficiency in the past that were based on the fact that it was too complex to do otherwise than trust and intermediaries form. I always tell my students that 15 years ago, you would not tell your child to get in a car. You would tell your child not to get in a car with a stranger. Now you might say, take Uber. And in part because the issues of complexity that would prevent us from doing some things are gone or going away. And it allows us to rethink rights and authorities going forward. And also the mention about the behaviors and records, that keeping track of that information, keeping track of use of information on you, even not only factual but behavioral activities, is now more doable than it was in the past. And yet we haven't raised the challenges to say, do others have a right to take exhaust and interpret it and use it in any way they want? Austin?
Yeah, Ben, I think on the first point, I think you're right. I mean, I think, the nature of technology is we can now handle a greater degree of complexity without, but I think on the flip side, I think it goes to a lot of what Kel and Ron were saying, and also the prior question of, centralization versus decentralization, and why, I think in 2017, all of us were just, we're going to decentralize everything, right? I mean, I was the first in line, and, Steam it was going to be the new Facebook, right? Like, who would stay with Facebook when you can get paid for your views, right? And then you learn that there's more to those networks than the economics of them or whatever. And I think it also raised that doing this right is hard, right? I think and that's Facebook can roll back bad code in an instant, right? If Bitcoin Core rolls out bad code and all the nodes adopt it, that could be the end of Bitcoin, right? So the stakes for mistakes are huge, and I think we've seen a ton of smart contract failures and massive amounts of money left, and and I think that's all perhaps trying to go too fast with complexity. I mean, I think I'm not suggesting we don't try that. I mean, I think everyone should be trying everything they can. That's the nature of innovation. That's the nature of growth. We should also be honest to people who are using these things about, that there are risks involved. But So yeah, I mean, on the one hand, we are much more capable of integrating complexity and leveraging these decentralized systems and, for the benefit of the world. On the other hand, we over the last few years, a lot of mistakes have been made in that goal. And that's the nature of innovation. But yeah, it'll be exciting to watch, certainly.
Other comments from panel? Ronnie?
Yeah, I just to chime in on what Austin's talking about a little bit as well. I think one of the interesting things about the complexity is what I often call the last mile problem, or the UX, right? Like for a long time, things like crypto assets were just hard to do for everyday ordinary people. My elderly mother was not buying coffee with Bitcoin, for example. And we're beginning to see the evolution of technologies and capabilities reflective in PayPal, which everyone's used to. And, we talk about Coinbase having, 35 million accounts. PayPal has over 275 million accounts. And as you begin to see that adoption, you begin to see the question around, if this solves a problem like friction and cost and identity, what are the tools we give everyday people to use them? And I often joke that we'll stop, blockchain will have arrived when we stop saying the word blockchain, simply because it'll be a series of services available across different industries and for a greater portion of users around the world. But Austin's absolutely right. The complexity problem is not going away either, because there's this, what's the saying? The pace of innovation will never be as slow as it is today. So what will happen in the next 5 years, in the next 10 years, as the amount of data we're able to process, as the number of crypto transactions we're able to process increases, how do we make that available? How do we define identity and make the tools available for Kel to own his own identity and sell that identity to the highest bidder when he wants easily? Those are part of those ecosystem challenges in my mind.
Yeah, we've historically had a lot of these things bundled for efficiency. Those intermediary institutions, the price discovery mixed with identity and all that were efficiently bundled under an institutional structure. But they are now electable services that we can unbundle and divest and distribute those rights and authorities, and that may change somewhat on the landscape. One of my campaigns always is that we tend to try to fix the 20th century while we're, instead of barreling ahead on the 21st on so many ways, that I often want to challenge a lot of the fixes again and restrictions against the retention of those restrictions or necessity of retaining those in the 21st century. So things like price discovery can be a commodity service off to the side that monitors markets. Identity can be a service as well. Cal, now in your domain, the accounting and taxation, monitoring, the record of activities that are needed as a part of responsibility and association, that's going to increase in complexity as well, too. You're more needed than ever.
It does, and it's funny. A lot of people, when I tell them what we do, they're like, "Wait a minute!" They still have some of these 2012 viewpoints that are almost a decade old now, and they're like, I thought everybody was hiding money with Bitcoin. I thought, why would anybody ever want to get accounted for and pay taxes and audit? Well, there's, companies going public. There are public companies using it. There's people who want to get accounted for their digital assets. And that's what we help with. The age-old idea of dark web people, using crypto specifically to hide. They still use it for ransomware, but if you'll notice, all the ransomwares are small amounts, relatively speaking, say 25 grand, something like that, because it turns out that with modern day computer analytics, it's the most trackable and traceable currency known to man. Now, whether the FBI is going to crank up the helicopters and, take a jet over to, some country where they treat hacking like a business, right? Where they have people that clock in at 9 and clock out at 6 o'clock, and they've got a whole room of 30 or 40 people that are sitting there just hacking day in, day out as a business. They may not go after that for 25 grand, but they've gone after other ones and various things that were laundering or causing issues. Silk Road was shut down, things like that. And so it's definitely a change that everybody in the top fintech space, financial spaces, everything of that nature is doing. And that's what we're glad to provide that bridge for, is that there's people out there that I'm doing business. I'm doing, I think BitPay has done over $1 billion in payments. And they want to, present that to the markets and the governments and the regulators. And, those things are being done, and they're recognizing that the SEC, the IRS, the OCC, the CFTC, they all have acknowledged this. The SEC 2 weeks ago put a separate division just for dealing with this, and are welcoming, comments to bring this into the financial class that it is. So, and probably I should wait till later on, but I'll tell you what I do right now. I was talking to a top 50 publicly traded company, and at the end of the day, after he had said, well, yeah, my son plays around with this stuff. He's in college, right? And he goes, I'm not sure if we're going to get into it. And I said, well, is it going away? And he's like, nah, it's not going away. And I was like, is it getting bigger? He goes, yeah, it is. I was like, okay, I'm sure we'll talk later on. So, it is a huge change, and digital assets in general, not just cryptocurrency, are coming in, and people are using them as the basis for financial activity. And that's what we're seeing in the rise in our business, of people wanting to have it audited and have it certified and have it accounted for and have their taxes paid for.
And we're moving into a time of away from our episodic and ephemeral audits into a continuous audit basis that's going to have a continuous exposure. So as some of those trends happen, you're going to become even more relevant to inline and continuous audit review.
Exactly. The idea of waiting for a year and having examples like Wirecard over in Germany, where they had faked billions of dollars of revenue and basically the company was worthless and got shut down. Why do you have to wait till the end of the year if you have a blockchain that is shared data and you can see, you can do real-time continuous audit at the same time the transactions are happening? So yeah, that is changing the face of financial assurance and accounting and audit.
Yeah, compliance issues, and we can take weak signals earlier on to raise concerns and seek investigations or explorations as well. Mm-hmm. As a part of that, I'd like to move into a sort of a final round of discussions associated with a forward-looking on expectations, if not predictions, then expectations of things to keep watching the skies as we go forward into 2021. But I also like to see if there are questions that are in the chat that are worthy to raise or timely to raise here now. We can do that, or bring them up shortly after a round of discussion on expectations. Shall we do that, Kel? You want to go ahead?
I saw one about hacking, which I was just talking about. Mm-hmm. But I think the number of the fiat, which is what normal current regular US dollar and others are called, I think the amount hacked, and again, let me just say real quick, the Bitcoin currency has never been hacked. What has happened is that centralized institutions like exchanges that help people buy cryptocurrency have been attacked, and their keys that control that currency have been compromised, kind of like passwords, right? I think it's around $10 to $15 billion. But again, that's like saying the US dollar is hacked if some bank left their vault door open during the middle of the day. The other thing I would say about the hacking of these institutions or exchanges that have had the private keys stolen, which are like the passwords, is I think I'm on 9, maybe 10 free credit monitoring systems right now, because Target got their systems hacked and my information was stolen. Home Depot, I don't know anybody who hasn't received free credit monitoring from a large centralized institution, taking my demographic information, my credit card information, and all that. So the fact that this is a digital asset and digital currency that's on digital systems and is available to be used at anywhere at any time globally on the internet is just an aspect of digital systems and digital everywhere not having sufficient security, and I know that's being improved daily.
You want to speak about the go forward?
Oh, sorry, I was responding to the question.
Oh, no, absolutely. No, that's what I wanted you to. I wanted to do that. But
on a go forward basis, I'll go against what kind of the industry I'm in and say that I think the kind of sleeper or not really noticed application and use case for blockchain is going to be supply chain, particularly with COVID and things of that nature. Supply chain is so much more critical. Everything is getting shipped nowadays. People are not going to stores. People are not going to warehouses. People are trying to reduce that. I don't know if everyone in the audience knows this, but I believe it was over a year ago, Walmart said, if you're not on our blockchain-based supply chain for leafy green vegetables, you're not doing business with us. That's been in production for over 2 years. That's not a pilot. And this year they started doing the same thing with pharmaceuticals. So anyone out there who remembers things like the Tylenol poisoning and things like that, the ability, particularly with multiple suppliers and multiple transports, I think supply chain globally, in terms of having an integrated, secure view of where things came from, whether you're worried about, was it responsibly harvested? Is this, blood diamonds? Is this child labor or anything like that? And tracking and knowing that all the way through where it's been exposed to. Has the COVID vaccine been kept at less than the certain number of degrees to make sure it's good and viable, and being done in a way on blockchain that's immutable and trustworthy and trackable by all players in the ecosystem, I think is really going to be a sleeper application that will provide benefits that not everybody's going to be aware of versus seeing, Bitcoin's price on CNBC.
that's true both forward and backward, forward and reverse on supply chains, that we're going to need extraordinary visibility on there. Austin, I know that you're encumbered by, in terms of having a glass sphere to offer predictions on the future, but what do you see on the horizon that we need to pay attention to? Regulatory compliance and legal issues that you expect might surface in the next year or so?
You're
muted. You're muted.
Yep, that's right. And yeah, kind of with the theme I was ending with earlier, I do think there's going to be a specific, a level of specific attention applied to, again, particularly Bitcoin, but also just crypto as money in, the U.S. and implications in the financial system. And I think a few areas that's likely to show up. So, for example, a couple of weeks ago, Brian Armstrong, CEO of Coinbase, went on a long tweet thread based on some rumors coming out of the Treasury Department that they're going to start regulating self-hosted wallets. Basically any wallet that you would want to control as an individual, in the context of the Bitcoin network, that is effectively how you have personal sovereignty and, financial freedom. And I think, the way that Brian Armstrong was sort of responding to the rumor, was suggesting that, it would also take the form of requiring, any of those centralized sort of the exchanges or hosted wallets, KYC AML before ever allowing a transfer out. I think ultimately the end game would be presumably the US government being able to track all the crypto wallets. So, there was a rumor that Treasury was going to try to rush that before the administration flipped over. In a couple, I think yesterday or the day before, we saw some stuff coming out of France trying to do a similar thing. So I think that's going to be a topic of conversation. I think that's pretty complicated, pretty messy. I'm not personally in support of it whatsoever. It's also not shocking, but I think it's reflective of, if Bitcoin in particular becomes potentially what it could become, it's inevitably going to conflict with, the monopoly of fiat money and the like, and create sort of problems within the existing financial system, which, in my opinion, kind of relies on its own monopoly to, prop itself up. And so I think that we'll probably see those regulations faster than we're probably expecting as soon as the appropriate regulators feel sufficiently afraid. And it'll be interesting to see how that plays out. I mean, another angle of that, we saw recently some proposed, I think it's called like the Stable Act. And it was purported to kind of regulate stable coins, particularly those pegged to fiat. And because again, it's basically I think the way the proponents called what's going on in crypto like a shadow banking system. And the regulation of stable coins at like the Circle level or the Tether level is one thing. But I think the interesting implications of that were, and this kind of played itself out in a few sort of public conversations, is that Ethereum is effectively running decentralized stable coins on its network, and some of the proponents have suggested that it's possible that an Ethereum node operator could effectively be running a bank, right? And so we've had these kind of conversations in different contexts for years about the potential risks that nodes face, whether it's if you think about the file coins and the storages of the world and data storage, if you just like open up your hard drive to anyone's data storage, you might not even know what kind of illegal content's being stored on your hard drives, right? When you're running the Bitcoin network on a node, are we going to have regulators saying you can't do that anymore? I think a lot of people think that'd be pretty dramatic. It also wouldn't surprise me if the government does pretty dramatic things. So, I think, we're going to run into some of these, I think, more complicated regulatory challenges than perhaps, securities and ICOs was one thing. But this feels like another wave of a different kind of attention and regulation, and it's more about money and monetary policy than it is about, a new kind of security or the new technology itself, so to speak.
Yeah, it's funny that ICOs were such a hot issue for a while, and now that's sort of faded. The issues on supply chain are rather dramatic, and as well. There's a question in. Can somebody read the question in the box? My screen is very small here. In the QA.
Where are you looking, Ben?
I'll go ahead. It says, how or where does blockchain fit in as a solution when within a secure and trusted ecosystem with known trusted participants? What does it bring to the solution otherwise? Well, if you completely 100% trust everybody in an ecosystem, then you're fine. But it also brings visibility. And I don't think, I've been in situations where companies do joint ventures. They still reserve the right to audit each other's books.
Yeah,
they still have checks. I don't know anything that's 100% secure and trusted. So the ability to bring visibility to that and to guarantee the trustworthiness between differing participants, even though they are trusted, trust but verify, I think Reagan said, is still valuable.
You might have pockets of what I call country club commerce, and that are walled gardens that people have their own engines and mechanisms and perceptions of trust. But certainly if those walls are breached, or if any those walls require reporting and notification, then clearly it's a very tight circle that you could have a completely closed country club commerce type structure as well. Jen had a question as well, and it's to you, Kel. So while you're there, go ahead.
I'm not sure exactly on that, but I know I've seen discussions around it, and I know that Walmart has moved with IBM on the trust trains that they do, so that they're tracking their pharmaceutical, because that is a great use case. You've got ingredients coming from one country being put into batches or lots of a manufacturing plant in a different country that is then transported through, ground transport, customs, water or air transport. It's a perfect use case. And I know several pharmaceutical companies are doing that individually. I don't have it off the top of my head. I mean, I've got enough to deal with the financial part, but I keep up with it, and I know that it is I know it's in production with Walmart. I know Bayer and other major pharmaceuticals are actively either trialing or using in production blockchain. So can't give you details, but I know it's out there.
And certainly in Asia, we see more mature platforms emerging on food products, seafood, and so forth that are much more natural and less alien to introduction into our supply chains as well. Ron, I want to give you the last word on the future. You're going to tell us everything about what's going to happen in the near term, and your board will completely close their ears.
I appreciate the opportunity to get myself in that much trouble, Dr. Ben. So a couple of things, and I just want to weigh in real quickly on some of the stuff that Kel and Austin have said. I agree with Kel. I think supply chain is one of the most critical of the industry verticals that will benefit from blockchain over the long haul. Two other things that I think are really important to raise, and one issue when we think about the challenges of adoption. So two of the things to raise, I brought up identity earlier. The long-term ultimate benefit of capabilities like blockchain technology and other innovations will be the ability for people and organizations to own their identity more securely and to benefit from the ability to share their data versus the Facebook example, Kel, that you were giving earlier. I think another big industry and another big capability to look out for is what we broadly call tokenization. The ability to tokenize hard assets and remove the friction that prevents think about the unbanked and underbanked in the world I want to sell my house and it's going to take me weeks, if not months, to move things like title. Capabilities like blockchain are removing the friction from that, which changes the velocity and increases the velocity of economic activity. That, in my mind, is going to open up trillions of dollars in value over time around the world. I mean, still in the United States, I think the last report I had read was from 2017. We have something on the order of 60 million people who do not have economic identities or are unbanked or underbanked in some way. That needs to change. And blockchain, in my mind, is one of the platforms that enables that to happen. From a challenges perspective, I think it's really important to touch on something, and I think someone mentioned it in the Q&A box, is this challenge of interoperability, right? We say blockchain over and over, and Austin and Kel and Jagruti and I, we all know that there are dozens and dozens of different iterations of blockchain. And when we look at that, they all have different consensus methodologies, different ways of doing what they do. Part of the challenge will be, how do they connect? How do they interoperate? How do they share data in a way that maintains the integrity of that data? How do they maintain privacy between participants as well? So those are all conversations we're all involved in as part of this discussion. Those interoperability concerns, in my opinion, will be solved. And then lastly, on the crypto assets side, and I haven't looked recently, there's something on the order of 7,000 different digital assets listed around the world. I would not bother with the vast majority of them, but some subset of them will be with us permanently. And in my mind, there's not going to be a banking organization globally that won't need to be engaged in that ecosystem in some way. And I will not bet on Bitcoin's price, Dr. Ben, I'm sorry.
Excellent. I think the 21st century, if there's one hallmark of what's ongoing for the 21st century, it's about a reallocation of rights and authorities. Yeah. And that the technologies, the human practices, the human design, human systems are all going to be unsettling and readjusting, probably continuously throughout the century. But at the same time, these technologies are going to be essential to a reallocation of rights, decision rights, and decision authorities. And as we've heard from a number of folks in the discussion, a lot of that is about letting those who have been disenfranchised become enfranchised on ownership of assets that are truly theirs or their right, like your health information itself and other things like that. There's nothing more valuable you can give somebody than putting them in control of something they don't have control over. and we have that opportunity now to shuffle the deck. And it's not, the answer is not always the sovereign state, the sovereign institution. And that has been our default, or the corporate structures. So thank you all very much. Are there any other comments? Roop, do you have any other comments before we wrap up? I know we're a few minutes before exit.
Yeah, no, just thanks a lot for everybody for participating, and this has been an engaging interaction. I enjoyed it. I learned quite a bit out of it during doing research for it and also listening to you guys. So one common theme that I see is, I think 2020 is a turning point, an inflection year that we're sort of in the second innings of the space. So this year we have seen a lot of excitement and a lot of meaningful initiatives and meaningful actions that have come out, which I think will change the attitude and practical implication for blockchain and for digital assets and also for crypto. So just on that note, thank you all the panelists for being part of this. As I said in the beginning, if you have any ideas on how to grow the society, or folks that you think should be part of the team, or you want to join the team or the board, feel free to reach out to me directly. If you have ideas on events, please reach out to Jaguti Solanki at BitPay. And for sponsorship, reach out to Haley Middlebrooks at TIPCO. And I saw Melissa in here as well. Melissa Davis is our chair for membership. So if you want to join the society, please reach out to her. Thank you, everybody, for coming. We'll see you in the next year.
Thank you very much, panel. Awesome group. Awesome group.
Bye-bye.
Thank you.